For those joining the webinar, please just hang tight for a couple of seconds and then we're going to begin. Okay, I'm going to begin now and let others join as we go forward with the event. Good afternoon, everybody. My name is Matt Cohen, Vice President of Government Affairs and Communications for the Long Island Association. Happy Thursday. Very happy to have you all with us today. We have a really great event today. Our International Trade Committee, chaired by John Costanzo, who you see on your screen, will begin now. We have a tremendous panel of experts who are going to talk about having your business enter the Canadian market. Really informative, interesting, helpful information and resources here for our members today, and we're very pleased to offer it to you. So that said, I'd like to begin by introducing the chair of our International Trade Committee, John Costanzo. John T. Costanzo was appointed Executive Director of the Maple Business Council's New York chapter in June 2020, and is President and CEO of LDK Global Logistics, a New York-based transportation and logistics agency he founded in 2019. John has served in several senior executive roles over the past 30 years. President of Purolator International, a cross-border logistics company headquartered in Jericho, New York, with offices in 32 U.S. markets. President and CEO of Interpost, a joint venture of KLM and the Dutch Post Office. President of TNT Post Group's Express and International Mail business for the Americas region, and is a Senior VP of Emory Air Freight Corporation. An active member of the Long Island community, John also serves on the Long Island Regional Economic Development Council, the Board and Executive Committee for the Long Island Association, and Chair of the LIA's International Trade Committee, which is the vehicle in which we're offering this presentation to you today. He's also co-chair of the Long Island Manufacturing Committee for Empire State Development and is a director of the United Way of Long Island. With that impressive resume, ladies and gentlemen, John Costanzo, who is on mute.
I can run businesses, but I can't run a webinar. Sorry.
Thank you, John.
Thank you. Thank you for that very nice introduction, Matt. Well, thank you and welcome everyone to the 5th International Trade Committee meeting of the LIA, focused on trade, this time with Canada. With more than $1 billion in goods and services traded every day, or exported every day, I should say, to Canada, in professional services, e-commerce, retail, defense, aerospace, and I can go on and on. Canada is an excellent, perfect market for entry of a company considering expanding beyond the US borders. And today we're going to meet some key executives of Long Island and Canadian-based companies who already took that plunge and are prospering in Canada. We'll also hear from an advisor of the Toronto Stock Exchange and the Venture Exchange based here in New York, who will discuss the excellent opportunity to open in that market and some of the interesting and surprising benefits the Toronto Stock Exchange, the closest stock exchange to the New York Exchange, has to offer small, mid-sized businesses and larger businesses that wish to expand and raise capital for investment in the Canadian market, and here, actually. But first, a little housekeeping. One, you're on mute, not because we don't want to hear from you, but because we want to make sure the noise in the background doesn't interfere with the meeting today. But if you'd like to ask a question, on the bottom of your screen, there's a Q&A box. Please put them in there, and we'll get to as many of those as we can throughout the course of the session today. Also, the session will be recorded. If you'd like to share it with other people at the end, you can go to the Long Island Association website and see a copy of it later on. Now, before we meet our panelists, with Dave Fatizio's help, I'd like to review a few slides on the importance of the Canadian-US trade relationship. So Dave, if you could put that up. Thank you. Dave, can you open that in presentation mode? Down on the right bottom there, David, you'll see a little thing that looks like a screen. See it? to the left of you? Okay, there you go, right there, there you go. Okay, perfect. So first, U.S.-Canada trade is growing again and growing quite rapidly. The bilateral trade between the United States and Canada in the first 3 months of 2021 was $150 billion. That's $1.7 billion a day in bilateral trade, both directions. You can see in that left column, we're up 18.5, almost 19% in total trade versus a year ago. This was as of March, I believe, and month over month, it was up 22%. So the growth is accelerating, and as both economies begin to open up, although Canada is struggling a bit again with COVID, they are exporting and importing quite a bit as they did before. Exports are up almost identically. It favors a little bit the US. The exports are up 25%. Imports from Canada only up about 18%. Again, maybe indicative of what's happening right now in the Canadian market, but both healthy growth numbers. And again, overall, $150 billion in trade is the largest trade relationship the US has. It ranks now as #1 for US and growing. As for the importance of trade to New York State, if we go to the next slide, David. Thank you. Canada is New York's largest export market. In 2019, New York exported $14.2 billion worth of goods to Canada and $8.2 billion in services. It represents 20% of all New York exports, and it's the second and third, combined, it's greater than the second and third largest markets, Hong Kong and Switzerland. Agriculture exports accounted for $1 billion of New York exports to Canada. And we imported about $17 billion in goods in 2019. So, unlike our trade with other countries in the world, particularly some larger Asian markets, it's a fairly fairly balanced trade relationship. Both countries benefit greatly from this relationship. Canada, and last thing I say, Canada sells more to New York than it does to China, and it's true for US to China as well. We both import greatly from China, but not exporting there yet to the degree we'd like to. Dave, the next. Won't go through all of these goods that we're exporting, but you can see the top commodities that are exported from New York. New York's still a fairly large agricultural state. It edges out chemicals and other things, but machinery and equipment, minerals, metals still lead in terms of export commodity. To the right side, down towards the bottom, you can see a couple of sectors that are pretty important to Long Island, like optical, medical, precision instruments, perfumes, oils from companies like Estee Lauder manufacturing those and exporting to Canada. So it's a fairly broad base of commodities we export each year. If you can move to the next, Dave. And the services we sell or market in Canada, financial services leads the way, banks, investment services at $2.3 billion, and business professional services like legal, tax, accounting, business consulting services is a close second. Travel, transportation, companies like FedEx, UPS, others in the shipping business, and Livingston would probably come under that category. Royalties, I wasn't quite sure, I didn't look it up beforehand, but I suspect that has to do with the entertainment media industry in New York that is paying royalties to Canadian companies. And Canada is if we go to the next, Canada is heavily invested in New York. Until the COVID, 5 million Canadian travelers travel to New York on average every year. Nearly 500 Canadian-owned businesses are based in New York and employ over 66,000 people here. And by the way, if you look at the total number of companies dependent on trade with Canada in New York, it's over 600,000 companies. So, 600,000 people whose jobs depend on trade with Canada based here in New York. The metropolitan region, New York, New Jersey, Connecticut, it's over 1 million jobs. So it's a critical relationship to this area of the country as it is to many others. And it's also a top source of international investment, ranking #3 behind only the UK and France in investment here in the New York market. So companies interested in expanding beyond the US border or seeking investment, Canada would be a good place to look. There's plenty of opportunity there. It's already a vibrant market with lots of harmonization of regulations, tax law and every other treaty that helps facilitate that. And we've got 5 experts here today who can help us understand that over the next hour or so. Let's move to them and let me introduce each to you. First, Jim Peoples. Jim is the president and COO of Challenger Motor Freight and Logistics, one of the largest full truckload and logistics carriers in North America. Jim, you can see Jim's got his company's name there. He knows how to market his business. He holds a degree in engineering from TUNS, now Dalhousie University in Canada. He's a multidisciplinary leader that gets results. He joined Michelin Tire as a process engineer in 1986, and over the next 13 years held several positions in quality management, industrial engineering, and operations. In 1999, he joined Purolator, where I met Jim initially, to lead the hub operation in Toronto, while with Purolator, Jim held several progressively higher positions in quality management, operations, and last position I know was vice president of operations and engineering for the company. And he had a broad scope of responsibility across quality engineering, IT, operations, and other functions of the company. Jim, in 2013, joined Challenger, a Cambridge, Ontario-based transportation logistics company. They have offices throughout Canada and the United States. As chief operating officer, and in 2014 was appointed as president and chief operating officer. He also serves on the boards of Excellence Canada, that is, the Canadian Trucking Alliance, and the Supply Chain Management National Board of Directors. So welcome aboard, Jim. Thanks for joining us today. Frank Ingracia is the president and CEO of Clever Devices, a transit technology company based out here in Long Island that provides sustainable smart business systems to over 200 transit agencies in North America. He's been with Clever Devices since 2008, during which time the company grew from 20 million to over 160 million in sales and 75 to 500 people. He's also expanded internationally, including Canada, Italy, and Brazil. And Clever systems are deployed in many cities around North America, including New York, Chicago, Washington, Toronto, and Miami. Prior to Clever, he spent over 30 years in public finance on Wall Street, including 26 of those years with Goldman Sachs. He was a general partner of the firm and head of public finance, ultimately co-head of the municipal bond department. He retired from Goldman Sachs in 2008 to join Clever Devices. He's a graduate of Lehigh University with a BS in finance. He's a corporate trustee there. And probably his greatest accomplishment, I think, is that he's married to Elizabeth McCall and has 7 children. And he's actively involved, both of them, that is, are actively involved in several charitable and nonprofit activities here in Long Island. As on the board of Friends Academy, St. Dominic's, where he chairs finance, and the Long Island Association's vice chair. So welcome aboard, Frank. And next is James Poulant, who is Vice President, Portfolio and Strategy Products for the Solutions Group. He's Vice President of Portfolio and Strategy for the Products and Solution Group at Zebra. Many of you will remember Zebra. If you're not familiar with Zebra, originally a Symbol Technologies here on Long Island. So, and I think Jim probably has been there almost as long as they were around. But he's responsible for product and solution strategy, investments, development operations for the company's expansive technology portfolio, with more than 20 years of product management and marketing experience, and also much of that in Canada. Jim is a Canadian citizen and worked in Canada for the company for many years. He brings dynamic leadership and innovative product design experience needed to drive the Zebra Enterprise Asset Intelligence strategy throughout North America here. So welcome aboard, James. And Reed Hamilton is an advisor to the Toronto Stock Exchange based here in New York, as well as the TSX Venture Exchange, also based in New York City. In addition to his work with the TSX, Reed is also the director of the New York chapter of the Founder Institute, a pre-seed accelerator in 200 cities around the world, and on the board of the New York City Innovation Collective, a nonprofit focused on supporting the innovation community in New York and connecting it to other ecosystems globally. Really interesting background and a really, really interesting story you'll hear from Reed about today. And last but not least is Mary Lynn Driscoll, who is the Director of Business Development for Livingston International, the leader of Canadian and US brokerage and trade management with offices across the United States and Canada. Mary Lynn joined Livingston in 2015, and she leads a team of trade management executives here in the Northeastern United States who help exporters and importers to conduct business in compliance with international trade and customs regulations, which helps mitigate their risk associated with cross-border and international trade. Mary Lynn began her career at JFK working for an Italian importer, and then like me, who is of Italian-American heritage, speaks fluent Italian. So welcome, Mary Lynn. Great to have you. So with that, let's jump right in, if we could, to our Q&A session. I really am thrilled to have such experience aboard today, and I know we're going to learn a lot from this discussion. Again, just as a reminder, please put your questions in the question box if you have them, and I'll be sure to get to them throughout the course of our meeting. So let's start with Frank, if we could. Frank, Clever Devices established a successful business, or has established a successful business in Canada several years ago. In a conversation we had that you expressed, yes, that's been a great market entry for you, but it's also didn't come without its challenges initially. So perhaps you can give us a bit of color around that. What were some of the challenges you experienced, maybe some of the pitfalls to avoid?
Sure. Well, we've managed to hit every pitfall, so we can certainly give some advice on that. I would say that Canada is a great market, and we've had a great run up there, but we didn't really understand what we were doing until we got knee deep in it. And there were a number of things that we should have known going into it. So I'm just going to list a few things here, if it's okay, John, that we learned the hard way, and then we can get into any of these in more detail if you'd like. The first question that we had was, did we want to have a Canadian subsidiary or a branch of the domestic company? And we've had actually a very difficult time trying to understand the implications of each, and deciding which one was more relevant. And we were very late in the process before we made that decision. We also, we always thought that doing business in Canada was kind of like doing business in Minnesota, and didn't realize that it's a different country and it had totally different rules applied to it. And one of the big ones was currency fluctuations. And, we tried to sell our product in American dollars. For some reason, the Canadians didn't like that, and they wanted to deal in their own currency. And, we had to learn how to hedge because it turned out that after a long period of stability, the Canadian dollar started to fluctuate pretty dramatically against the American dollar. And it had big P&L implications. So we learned how to hedge currencies. We had to think about a totally different tax construct. The major taxes in Canada are sales taxes. They have a governmental sales tax, a provincial sales tax, which varies from province to province. And then in some cases, there's a harmonized sales tax. And we also learned that the Canadian Revenue Authority, which is the equivalent of the IRS here in the US, can be very slow and bureaucratic when you're not sure what you're supposed to be doing and getting answers. We also learned that you have to keep track of transfer pricing. When you have a subsidiary selling to another subsidiary, each country wants to make sure they're getting their fair share of the taxes. And so it no longer becomes what's the profitability of the transaction, but rather the profitability that is in country in both places. And there's an awful lot of accounting and rules that go with that. We learned that the employees are great employees. They're terrific people in Canada and very talented. And I might add, very diverse, especially if you're dealing in Toronto. But the benefits and payment packages are quite different. And comp is actually comparable in a dollar-based basis, but when you adjust for currency, it's actually less expensive to hire people in Canada. So that became a very attractive place for us. And we now have about 50 people up in Toronto, and there's a few people scattered around in the other provinces. There was a question about needing work visas, and non-residents that work in Canada are only allowed to work a certain number of days before they actually have to pay taxes like they're a Canadian citizen. And that created a whole bookkeeping thing for us that we weren't really aware of. And interestingly, some of the benefits packages are quite different. In Canada, you have to include massages as part of your healthcare package, which we thought was quite funny. We like that, actually. But eyeglasses are not included, and you end up all of these things end up creating a lot of hidden costs that we didn't anticipate from, that we would, if we were doing business in Minnesota, we wouldn't have had to have dealt with. So things like the company that helps process the Canadian taxes. We have an outsourced company that, takes our data feed and turns it into a tax liability and actually pays the taxes to the CRA. We needed a lot more accountants to deal with transfer pricing and things of that nature. We needed an HR consultant because the rules are quite different. The transfer pricing and the tax work became, much more burdensome than we expected. And even payroll processing, many of the companies that do payroll processing here in the US do not do it in Canada. And so you end up with a separate company there. So that's a short list of the things that we ran into. We learned them all the hard way. We didn't really do our research up front, which was a mistake. And I would encourage you all, if you're embarking on this, to do your research ahead of time.
Yeah, thank you, Frank. That's a great background. And I did experience some of those very same things. And we were in the reverse, opening a U.S. company or a subsidiary of a Canadian company. So we had to kind of translate all those things you just talked about into U.S., so to speak. But just one more question on this whole thing. Did you go it alone, so to speak? Your finance guys, HR people trying to figure all this out, or did you have any help from perhaps some of the government agencies in Canada or the US that maybe can help smooth things over for you?
We didn't really didn't access those resources. We probably should have. Our accounting firm had an affiliate in Canada, and so we went to them and said, okay, help us figure this out. They referred us to an attorney, but we kept getting, very unhelpful answers from the professionals up there. We'd say, what should we do? And the answer was, the law says this. It's okay, but what do other people do? And the law says this. Yeah. And, it became very frustrating. And so we as I say, we kind of groped our way through it. And, we got to a point where we're actually quite efficient now, but it wasn't always easy. Yeah. That doesn't mean there aren't resources available. We just know how to find them.
Yep. Sounds good. Thank you, Frank. Thanks for that. Let's kind of on that same point, Jim, I had a question for you. Is that, being a Canadian executive, there are many companies are hesitant to enter the Canadian market here in the US for the reasons Frank just outlined. There's complexity. It's a little bit of a challenge because a different country, some people think it's the 51st state when they go up there, right? They speak the same language to a large degree, and a lot of the regulatory stuff is harmonized well, but there are different rules, border clearance issues, tax issues. From your experience, would a partnership with a Canadian company be a good way to enter the market, maybe, or to help overcome some of those obstacles?
Yeah, thanks, John. And I'll build a little bit off some of the comments that Frank made, but I'll say that early on in my career, I had a chance to work on both sides of the border, and quite frankly, didn't see any of the challenges. I guess all of those had been worked out prior to any of the roles that I had. But more recently, I've had lots of opportunities to bump into executives from other trucking companies, and they always tell me that they would love to expand their markets into Canada, but they're hesitant to do so because of the challenges, some of the very same ones that Frank described. In fact, many of them had tried and found it so challenging that they decided to forego the market and have been wishful ever since. I will tell you, though, that our approach has been to take advantage of that situation. So I quite frankly enjoy talking to those executives that say they don't actually want to bring their resources into Canada, but they do want to have access to the market. And to me, that allows me to provide a solution to them to get access to the Canadian market. So we have a number of partnerships with trucking companies in the US, big US trucking companies that may bring their freight somewhere close to the border. And our company will arrange to pick up that freight from their company at some trans point and bring it into Canada and take care of all those things that Frank decided. So it really makes the choice to move into Canada much easier and not have to spend the resources or the time or the frustrations and the many years that it takes to optimize those processes that Frank described. So I would say that making a partnership with an existing trusting Canadian company is an easy way to break into the market. gives you time to figure out if you want to stay there, where you want to be, and to start to tackle some of the challenges that Frank talked about earlier. So that's really the perspective. I believe it is a good avenue to get into the market fairly quickly with a low investment and low risk.
Okay, thank you. That's great advice. Yeah, I can't tell you the number of companies that launched a Canadian business that we met afterwards, after they had done that over the years, and got in trouble, either with tax authorities, customs authorities, and took them months to wangle the way out of it. So maybe an easy way to get in would be to partner with somebody. Let's move to Jim, because Jim, you not only lead the portfolio strategy for Zebra Product and Solutions Group, but you're Canadian by birth, and you lead the company's business there, or you have led the company's business there. You also have had leadership roles here in the US. So you kind of have the unique perspective of having had leadership positions on both sides of the border. What can you tell us about the differences, in doing business in Canada versus the United States from your experience?
Yeah, well, I think we've covered off quite a few of them. I mean, when I was part of a company called Scientech Logics, which was a Canadian company, we were acquired by Motorola, and who had previously purchased Symbol Technology. So that's how this kind of all came to be. And the acquisition was really, it was more than just kind of entering Canada. There's a lot of talent in Canada, and especially in certain areas of technology. So the acquisition of Scion, kind of gave us a design center and a real center of excellence. If you look at the employee population there's about 300 Zebra employees, that live in Canada, about 200 of them located in the office that I used to manage, and about kind of 80 to 90% of them are engineers. And so, there's a lot of talent there. We've built out our automation, our machine vision, and our AI facilities in labs in Canada because of the amount of talent that comes out of University of Toronto, University of Waterloo, down in which, in my previous career at BlackBerry, we were literally, on university property effectively, and we had an incredible flow of interns and things like that. So there's lots of really great talent and programs to get there. There are definitely accounting and financial differences between the US and Canada. So I won't even pretend that I could explain those to you in any level of detail, but I do know that Canada has some really great R&D tax credits. And one of the reasons that we maintain a really strong R&D presence there and engineering presence there is because of those tax credits. I think, I'm not sure if it was Frank, I think Frank mentioned visas. We look for international talent, obviously, like most tech companies do. And we've found locating people in Canada to be a much easier process, especially of late versus the US, especially from certain countries where, we find a lot of tech talent. So the visa piece is pretty important, but HR law is really different. And I know that, I've moved to the US, and I'm aware that I'm kind of employed at will versus having a more kind of pro-employee set of laws. So termination rules, non-competes in Canada are kind of like, well, at least my experience has been, yeah, you'll sign one, but it really doesn't matter. They can't really hold it against it. Long-term incentive programs, the other way, when I came down to the US, my long-term incentive program stuff, and that's probably more beneficial. So I've, definitely realized that. One thing that people maybe don't talk about is, Canada has some cultural laws, I'll call it. And Jim, you're not really in the packaging business, and Frank, you probably do some packaging, right? So, the idea of the rules around how you create packaging and dual language, bilingual languages, some of the rules around if you're in the food business, what kind of information you have to disclose on packaging. There's a bunch of things like there. So that doesn't impact me so much anymore at Zebra, but in some of my other previous roles, that kind of thing was pretty important. But I will say that I think, the business and the social norms are actually really, really pretty similar. I remember when I first interviewed in Long Island, came in for my interview, flew in from Toronto. One of the first questions they asked me was like, "Hey, you're Canadian. Are you going to be able to handle these New Yorkers, this attitude?" And I was like, I think I dropped an F-bomb just to kind of prove that I could handle it. But they, we're two groups of really passionate employees, and I don't see a huge amount of diversity really when it comes to that. I think, you said languages, experiences are pretty common. I think our global perspectives, allow us to kind of coexist pretty effectively. So yeah, I think that there's a lot of benefit. But I will tell you that when we look at hiring, we kind of put salaries in two buckets. There's the US, Canada, and then kind of Bangalore, if you will, right? So there's a lot of value, especially in some really high-tech roles, engineering roles, software development, AI, things like that, where the cost for those employees is quite a bit less than what you would pay for in comparable, especially in New York. So those are just some things to consider.
I think those are great, and I really appreciate you covering the tech corridor between Waterloo, Quebec. I think, if I'm not mistaken, it's now rivaling Silicon Valley in terms of talent. So,
yeah,
so thank you.
It really is, and there's some great resources too. If you want to actually do some research, there's a website called levels.fyi, and you can actually look on a region by region basis, city-wide in the US, and compare to Canada for different role types, including management roles, that'll give you a sense of what the compensation differences look like.
Yeah, and I guess we don't want to scare off anybody back in. There is a lot of complexity because it's a different country, but it's, when you compare it, just from my experience with logistics, compare it to trying to enter the EU, for example. If you think regulatory regimes are tough in Canada and the States, you haven't lived till you've been to the EU and tried to deal with Brussels. So, and that's there. And then Asia is a whole other story. So it is still relatively simple, or not simple. It's easier to get into Canada if you have the right people and you do your work, I think, as our guests here today are expressing up front. I'd like to move, if we could, to Reed, because Reed has an interesting story to tell. I learned about Toronto's Stock Exchange's activities here a few months ago. And Reed, what I'd like to ask you about is that Long Island has a pretty good mixture of large and small companies, mid-sized companies as well. Where we have companies like Canon, Henry Schein, Zebra Technologies on sort of the larger end of things, and then companies like Clever Devices, they're in the middle at a couple of $100 million, I think, Frank, now, if I'm not mistaken, roughly. And yeah, okay, fairly good sized businesses. But we have most businesses in Long Island are small entrepreneurial businesses of 20 or so people that struggle often to find capital. And that's true of any business, really, any small to mid-sized business. One of the challenges, how would the TSX, that is, compare to over-the-counter markets, let's say, here in the States?
Yeah, thanks, John. It's a great question. I think first it should be important that going public, either OTX or Toronto Stock Exchange, that's not for most companies. It's good for, most companies would probably benefit from, staying private. A lot of benefits to that. There is kind of a profile for companies where it does make sense, like in terms of your needs for capital and growing. We see this particularly kind of in the more innovative tech businesses and life sciences and clean tech, where you have kind of a continual need for capital before you become, kind of reach that profitability runway. And if that kind of company, if that describes what you're doing, then I think a market like, TSX Venture compared to something like over the counter here, it makes a lot more sense that in credibility. I mean, there's a lot we can get into on the differences between it, but I'd say, like, from a high level, that the credibility that you get as being like a venture listed exchange, in Toronto, that is a perfectly legitimate way to raise capital. We're here, and my background before I did any of this, I worked at a hedge fund and in public markets before, and bulletin board, these smaller stocks, they are not known for being high quality, right? Like this is sort of where, maybe once good companies go to die, or, companies that are a little bit feel scammy in some way, like, but they're, I don't mean to, paint with a big brush, but there is that sort of perception among investors. And I think legitimacy, because Canada has traditionally not had a really well-developed venture community like the US has. So it is, you get a little bit of capital and you get to a certain level of traction, and then it's just been the path that you go public. And companies are doing that rather than sort of, what you would do like a Series A, Series B down here. Instead, you go to the public markets, use venture exchange as a stepping stone to the Toronto Stock Exchange, and then possibly even a dual listing NASDAQ NYSE. The regulations make that really, really simple. So we see that pretty frequently.
So, and if I'm not mistaken, the venture exchange has a much lower threshold for raising capital than the New York Exchange, for example, would. Is that right?
Oh yeah, for sure. Compared to NASDAQ NYSE, I mean, if you want to talk about just in general why Canada versus the US, it's because, there's a lot of other reasons, but mostly it's not a viable option for most companies, until you get to $1 billion. 500 million are up, but there's a reason we have all these like private unicorns here. And in Canada, you have an amazing kind of like scarcity premium for these, companies of that size. So if you come in at, even $100 million valuation, you are a fairly big fish in a smaller pond. You get media coverage, you get analyst coverage, and you're public. So this is also coming to help on the business side of things, because say you're a business-to-business type of, B2B, and you deal with a lot of large clients. Being public, they can kind of see your books, they can see what you're doing, they can prove that, and that can make the sales process a lot easier too.
Appreciate that. Thank you. Let's move over to Mary Lynn. Mary Lynn, when I was with you earlier, most of our customers that were entering Canada did so as a non-resident importer. I think almost 80% of our clients registered in Canada as such. Can you explain to us why and what maybe some of the benefits of doing so would be?
Sure, but before I do so, I want to say this conversation is bittersweet to me, because I hear stories like Frank shared where he went to an attorney and they're like, this is the law and this is what you should read and this is the law. And I'm like, oh my gosh, my job and my team's job is to educate and train and make sure you're entitled, you know what your rights are. Sweet, because, people like you, I guess that's why I'm still employed. So, sure, NRI. So what is NRI? I'll keep it high level just for, I don't want to assume everybody knows, but NRI is a foreign or US-based business that is able to ship goods into Canada while still enjoying some advantages as Canadian importers. However, they do not need to invest in the Canadian manufacturing facilities, distributions, and sales offices. So there are a number of advantages to be part of the NRI program. You're limiting the carriers and brokers involved, which is actually a really good thing. Plus, you'll have access to export paperwork, and hopefully in a consistent fashion, whether it be manual, EDI feed, which is always the probably the safest way to go, and well enabled, which makes it easier to manage brokerage, freight, and of course duty costs. What's that?
Yeah, it's terrific. So you're seeing most companies enter the market as non-resident importers still today?
Yeah, absolutely. Yeah.
Okay.
And you reap the benefits as well from a GST perspective, right? So for those who are not aware, as an NRI, GST can be recovered in two ways. One is a flow-through method where GST is included in the cost of the goods to the customer. So a copy of the B3 document is provided to the customer, so they could take on the import tax credit and include the GST expense on their returns. They can also register for GST numbers and collect the GST on the sales into Canada. NRI,
I'm sorry, go ahead. I didn't mean to
no,
interrupt.
okay. NRI can recover the GST paid at the importer by charging GST on their sales into Canada. So they can elect to file monthly, quarterly, or annually. So just important, again, any type of trade that you're doing into Canada, it's not complex and it doesn't have to be scary. I think it's super important to find a provider that's willing to, share information with you. And it's important on your part as well to ask what you're entitled to. I think that's the most important part. What am I entitled to? And know your rights, whether it's duty drawback, and understanding that program. I'm a big believer, do not leave money with the government. They already take enough from us. So take it back if you have the right to. And we can get into duty drawback if you'd like to discuss that as well, John.
I would. I'm going to come back to that though, because I think I read somewhere there's billions of dollars left on the table that companies are not aware of being able to recover. So I want to come back to that specifically. Before I do, I want to get to Jim, and I had a question for you, Jim. But a lot of companies assume when they enter the Canadian market, it's similar to say entering the European market or the Asian market or whatever. They have to open a distribution center or warehouse in that market. They need presence in the market physically in order to better serve the market. But the country is bigger than the United States. And most of them go in and enter in Toronto, which is not a whole lot different than fulfilling orders from Ohio. But they make that mistake sometimes, and then they end up holding inventory in both countries, which is very expensive, right, to do, and not always as efficient either, fulfilling orders. My question to you is, what have you seen in terms of being able to fulfill orders from the United States via transportation services, whether it's your company or others? The cost could be high right now, but is it better to open up facilities in Canada? Or what would your rule of thumb be? Or serve those customers from your US distribution centers and pay a little more for transportation?
You want me to answer all that in just 2 minutes, John?
Yeah, that'd be great.
All right, it's a good question. The land values in Ontario and Quebec right now are escalating at an incredible rate. You're going to pay upwards of $3 million an acre for prime retail, for prime warehouse space. That doesn't necessarily include the building that goes with that. And so it's getting cost prohibitive for organizations to have a warehouse in kind of Quebec or Ontario. There are 38 million people that live in Canada, just about the size of California, I guess. And 90% of those people live within 100 miles of the border from coast to coast. So that means if you want to access the market in Canada, it's pretty easy to get to all of those customers across Canada within 100 miles of the border. So that means you could easily have your warehouse or distribution center or transfer point or cross dock anywhere south of the border within a couple of hours drive. And so if you think about doing that, a truck driver can drive 500 miles a day, including a border cross. And so if you had a warehouse or a DC, in New York within a few hours drive to the border, or in Ohio or anywhere along the northeast coast, you could easily get into Canada and access most of the market using a carrier that can drive that 500-mile space. So my suggestion and recommendation would be, because of the challenge to getting good space today, it's getting gobbled up really, really quickly, is to have a space along those areas that we talked about within a few hours drive of the border, have your DC there or transload location there, and move it across the border either by truck or by plane or whatever the mode you choose. And you can access most of your customers in Canada using that vehicle methodology. In your business, John, prior to what you're doing today, using a courier network allows you to access even more customers across Canada, even the remote regions of Canada, both the East Coast direction, the West Coast direction, or Northern Canada. So it's a pretty good decision, a pretty smart decision, I think, to think about it from that perspective, John.
Yeah, I agree. I think you made a great point too. I think it's 65% of the population lives in either Ontario or Quebec, right? Which is, if you drew a circle around New York City, 500, 700 miles, you capture most of that.
Yeah, 23 million of that 38 live in Ontario and Quebec. So that's the place you want to be, right?
Yeah, makes a lot of sense. Thank you for that. Let's move to Jim, if we could go back to Jim, that is. Jim, Zebra sells its products worldwide and has been doing business in Canada for many years. You know, excluding the United States, how important is Canada for Zebra Technologies as a market?
Well, you know, like, as I said earlier, you know, when we look at the value of Canada in a couple of different dimensions. I think from a sales perspective, when you think about Zebra sales revenue, North America is, you know, our biggest region for sure. Canada is probably in about just around 5% of the North America sales revenue. And you know, 20 was a tough year in Canada, kind of continues to struggle a little bit. So I'm sure that, you know, that has a little bit of play. But again, I think, you know, it's an important region from a sales perspective. But kind of going back to that whole idea of our operations there and our design center and keeping a presence in Canada is also really critical.
Yeah, I agree. You know, it's interesting. It depends on your sector, industry sector, but you know, I saw a little company up in northern Minnesota go from no business in Canada to where, and they cracked $1 billion in sales, and 30% of that was Canadian sales, because they figured out how to get into the market overnight and beat their competitors on delivery from their fulfillment center up in northern Minnesota. So, you know, you should look at that, kind of similar to what Jim Peoples was saying too. You know, if you're within that 500-mile radius bubble, or you have a way to access the market quicker than your competitors, even your Canadian competitors, it's worth considering that. Let's go back to Mary Lynn. Mary Lynn, you were touching on something that I think for anyone doing business in Canada today, in fact, not only Canada, but anywhere in the world, duty drawback, tax recovery is often overlooked, and there's lots of money left on the table every year. So can you elaborate on that a bit?
Yeah, absolutely. So several types of recoveries that you are entitled to and you should learn about. So ask your provider. One is duty drawback, which is not the same as duty recovery. So just to establish that right away. And I'll get to that in a second. But duty drawback is just a special program which entitles you to receive 99% of your duties, taxes, and fees back. Most importers are under the impression that this just applies to your duties, and it doesn't. So if you look at your entry packet forms, you should have a form called a 7501. And on that 7501, you'll notice a fee called MPF, which stands for Merchandise Processing Fee, which is at 0.3456%, I believe right now. It doesn't change too often, but you're entitled to that back as well. You're also entitled to your HMF, which stands for Harbor Maintenance Fee. So again, 99% of your duties back. And the great thing about that is you can go back 5 years in the United States to do those recoveries. Okay, so again, ask the questions to your provider and just know what you're entitled to. In Canada, I believe now you can go back historically 4 years. So difference between duty drawback, that's an import that made it into the United States, which was then either re-exported to Canada or Mexico. Duty recovery simply applies to the import into the US. Section 301, for instance, that would be a duty recovery. Understanding and knowing your free trade agreements, right? So the USMCA, the new NAFTA, if you will. So these are things that you are entitled to get back. Now, a few facts that you should know if you are interested in enrolling, and you should inquire at least, into the duty drawback program. Some of the key, I guess, record keeping items you would need is import entry, so documents, import invoice, warehouse receipts, warehouse withdrawals, import-export bills of lading, okay? And obviously a copy of your Canadian import entry. So you just have to compare your import to the export, okay? There are also several options in receiving your money back a little bit faster. And if I were you, I would absolutely take the option of accelerated payment, because dealing with the government, they can take years to get your recovery back to you. So with the accelerated payment, which is called a 7553, it just speeds up the process where you're going to see your refunds back a lot faster. Okay, definitely worth it. I don't even know if there's a $75 fee perhaps or something like that associated with it, but worth every penny. Again, because the government's not really willing to relinquish any money back to you. This will get it back a little bit faster. There are some
That's
other
great.
items. Oh, I'm sorry. My Academy Award, hurry up.
No, it's fine. It's fine. I was just going to say, one of the things we used to do is, all those numbers and regulations you just covered scare a lot of people into going into Canada, right? Oh, if I got to learn about all that, it's terrible. Well, we used to just say, you want to talk to somebody like Mary Lynn. She knows all about that stuff, and she'll get your money back for you and take care of all that for you. So I think your advice probably would be make sure you sign up with a good customs broker or trade management firm, right?
Absolutely. Yeah, sign up and ask the questions, right? I mean, unfortunately, not every provider is excited or as enthusiastic as I am about getting money back. They're looking just to clear an entry, which anybody can do. So, make sure that you're asking the questions, because it is your business, right? It's your money, and you should know what you're entitled to. Very important.
Couldn't agree more. Frank, I'm going to come back to you now. You have hired 50 people up in Canada, and we did talk a little bit about the talent in Canada, technical talent. But what advice would you have for anybody who's looking to hire tech talent in the Canadian market? How would you go about it? Any insights you have?
Well, we have a recruiter on staff who does a lot of this work for us, but it's been really a welcome surprise, the quality of the people that we get. The thing I'm finding lately is that there's a lot more turnover. It seems like Toronto in particular has become a hot market for software developers, and it's harder to retain people. So I'm not sure that we'll be able to continue with the same record that we've had, but it's been a great run. We've hired really great people. They are very skilled in some respects, actually better than their American counterparts, and but you can't expect that they're going to have a career at your place. They're there for a couple of years and then on to the next thing.
A couple of years in the U.S. would be a great tenure for
yeah.
tech
We're seeing similar trends in the U.S. also now.
Yeah.
Google and Apple are entering more and more markets. It gets harder and harder to keep good people.
Yeah. I don't know much about the H-1B visa situation there, but is that a benefit, the way Canada handles visas of that nature?
It's a big benefit. We actually have had some people that their time ran out and they had to leave the country, and they were able to move to Canada. And after they established residency for, I think, a year, they're now eligible to come back to the U.S. And just having the year to stay in play allows their paperwork to proceed through the U.S. as well. But the thing, I don't really understand it. Those of you who are from Canada would understand it better. But I think the whole British Commonwealth and the immigration rules that it apply to those people, you get a much more diverse group of people than you see here in the U.S., where we've clamped down a little bit.
Yeah, I used to fly up to Canada once a week at least, and usually go in a Sunday evening, and every international flight in the world was coming in. Yeah. Unfortunately, this was before I got my my automatic entry pass.
Nexus.
Yeah, Nexus.
Gotta have Nexus, man.
You gotta have Nexus in Canada, definitely, especially if you go in Sunday evening, because it is very diverse community, and lots of folks coming in. But also,
I think I would add, John, if I could, I talked about currency hedging before, and we discovered that the best way to hedge currency is to spend the money that you get in the place that you get it from. And that was a big part of why we ended up hiring people in Canada. We got a big contract with the Toronto Transit Commission, and we wanted to source as much material as we could in Canada and hire as many people as we could in Canada to essentially have a perfect hedge without having to use financial instruments.
That is a great point, and not to belabor that, but 65% of our billings in my previous life at Purolator were US dollar billings, 35% Canadian. If for whatever reason that worked out to be a perfect hedge as well. So we never had a hedge. We kind of had a natural hedge. So that's great advice. That was on revenue billing. Hadn't thought about that from labor and from supplier cost as well. Yeah.
We would only hedge the difference between what we knew we were going to spend in Canada and what we were going to receive. We didn't have to hedge the whole thing.
Okay, that's terrific. Yep, great advice. Rita, I'm going to come back to you for a moment. So you already explained the advantages, perhaps, of listing in Canada. If a company wanted to explore raising capital through the Toronto Stock Exchange or the TSX, can you share with us how they go about doing that?
Yeah, for sure. I mean, so few things, and I'll go over this really briefly right now, but we have what we call the 4 R's. If you're looking to do it, you want to kind of make sure you have reasons for going public up in Canada. That's usually going to be a little bit something else in addition to just raising capital. So there should be kind of a reason you would benefit from being public. You need to kind of make sure you're ready. So you have to have, couple of years worth of audited financials. There's some aspects there. You need to hit the listing requirements. Those for the Toronto Venture Exchange are pretty minimal, but you do have to have like kind of a certain level of working capital. There's some differences depending on what industry and exactly what market you're going on to. So we can go into those details, and then I think the most important part, I mean, those are all very important, but then the last one is it actually realistic for you to go public? And that's where, we're not the people making that call. What we do is we usually will connect you with either some investment bankers, that's kind of like for more the traditional IPO route up there, and they know the market really well. They'll be able to, kind of tell you, a company like this is a story that's resonating with investors right now, and we'll go from there. We also have another program, which I don't have time to get into in a lot of detail, but for kind of earlier stage companies, there's the CPC program. It stands for Capital Pool Companies. Essentially, I think for people in the US, the easiest, quickest way to understand it is it's kind of a mini SPAC. So these are purposely built companies. They get listed without having a business, and then they go find a private business to reverse merge into, and there's some advantages to going that route, particularly I would say like kind of if you're in a little bit on the smaller side, like say 50 million valuation or less, is a CPC can be a really valuable way to do that.
Thank you, good advice. Jim, I'm going to come back to you. You meant, I think if I'm not mistaken, Challenger moves somewhere between 500 700 truckloads a day between the United States and Canada of goods crossing the border. And from your vantage point, which segments or products do you see the most growth in over the last year or two?
Yeah, thanks, John. It's been a crazy couple of years, let me tell you, from Trump era tariffs on lumber and aluminum and steel, right into COVID, where the buying dynamics have significantly changed. So there's 4 or 5 things I'll share with you. I'm gonna read them off in alphabetical order. I'll let you decide whether they're in priority or not. The first one is alcohol consumption. Beer, wine, and spirits has significantly increased over the last many months, followed closely by automotive. It's been more up and down, and currently it's down because of the shortage of the GUI software cards that we need for the cars and for the trucks. And so there's a bit of a lull right now in activity there, but I expect that once they solve that, that is going to explode again very, very quickly. Construction materials is probably the next biggest one. So lumber, and you can probably hear it on the news on a daily basis, increasing costs for buying lumber. A lot of the lumber that goes into the US comes from Canada. It's very, very expensive in Canada now to buy a 2x4 or any piece of building material lumber. Again, copper and steel as part of wiring for houses and things like that. Certain significant growth there. E-commerce has been the poster child of growth for the last, I'll say 18 months or so, with folks shopping from home. More and more things are coming across the border, both going south and coming north. And finally, the last one, no surprise, is the pharmaceutical market. So the healthcare and pharmaceutical has seen huge growth with PPE. In Canada, not so much in the US, but in Canada, we also move a lot of cannabis products, so it's legal in Canada. So that's been growing significantly, maybe similar to the alcohol products. So those are the markets that are growing right now. I expect they will last for another several months until things start to stabilize with COVID. And the buying patterns may change a little bit, but those are kind of the prominent ones, John.
Thank you. Thank you, Jim. Mary Lynn, I'm going to move back to you and ask, what can you tell us about the efforts of the U.S. Customs Department and Canadian Border Services Agency, Customs and Border Services, I guess, efforts to harmonize regulations to make it easier to move product back and forth, particularly in industries like automotive that manufacture on both sides of the border, right? How does that help?
That's a great question. Well, first of all, we're not doing, it's not the same as doing business in Mexico. So let me assure you, although it sounds scary, it's not. US and Canada truly try extremely hard to harmonize as much as possible to make the transitions or interactions smooth. I'll give you an example for those who may not be aware. Even classifications that are used, the first 6 digits for harmonizing tariff schedule are the same. It's the last 4 digits that will determine any type of permits, licensing required, obviously your duty rates. So there are few minor details. If, again, getting partnered up with the right broker, you'll learn about them. But 10 easy steps, honestly, to importing into Canada is important to know. So determining if your goods are allowed into Canada is first. Determining the classification, understanding your import responsibilities of which documents you need, register your business for import or export, determine how you'll submit your entry. Will it be through courier, broker? Will you do it yourself? How will you pay your duties? Plan for the shipments of your goods, identify the terms of sale. That's a big thing for a lot of folks not understanding Incoterms, right? So that's going to help as well. And lastly, build a customs compliance program. Make sure your internal processes, tariffs, fees, understand your trade agreements, valuation. These are really important things. They're not that complex, but all those 10 items will make trade much easier between Canada and US.
And I think, as you said, finding the right partner to help you figure out all that and what's best for you is probably, there's lots of help available, as you pointed out.
Yeah, absolutely. I mean, we even discussed last week, for those of you who are on the line, there's money in garbage. You were laughing at that when I said that, right? But it's the truth. There is money in garbage. Believe it or not, for instance, if you're importing, let's say, chocolate in the summertime and your temp controlled truck perhaps breaks down, right? And it compromises the chocolate cannot be sold, but you already pay the duties into the States. Again, know your rights. You're entitled to destruction. As long as US Customs is present, you're filling out the paperwork correctly. So that's why I tell people, there's money in garbage. You think you're just going to throw it out and lose your money, and you're not. And we laughed about that one.
Well, thank you. That'd be a great tagline for a business.
Just want to let you know, Mary Lynn, my reefer trucks don't break down.
Yeah, you know what? I swear I was going to say, other than Challenger, I don't think you'll have that issue.
Yeah, Jim has invested quite a bit in that equipment. Okay, I'm going to close this out with one last question. I think it challenges some companies thinking about entering the market, and you touched on it, Jim. It's a bilingual country, right? And there are certain laws and requirements for doing business in the market. How important is it to understand that before you enter the market? And how important maybe is it to hire people that are both fluent in both languages when opening in Canada?
So it's a good question. So there's actually a lot of programs. Like when I was a kid, my parents put me in French immersion. So from kindergarten through high school, I was, taught partly in French and partly in English, and that's living in Ontario. So it was kind of a choice. So, there's a lot of programs that promote bilingualism in Canada. But, I think statistically, we talked about where the population is located, right, in Ontario and Quebec. There's really two provinces that are kind of legally and officially bilingual. There's Quebec and New Brunswick, but 75% of Canadians report their kind of English as being their first official spoken language. And about 20% nationally are kind of identify as being bilingual. In Ontario, it's like 11%. So I think, it is important, and it certainly it's an important consideration depending on the jobs that you're doing. People that are customer facing, if you're going to be working broadly across Canada, I think that could be important. But if I think about the population of Zebra employees, engineering employees located in Mississauga, bilingualism wasn't a particularly crucial business requirement. So among the things of don't let it scare you, I would say, that you can put that probably on the list, is it's not as crucial as you might think. I think you just have to you have to understand that it's important, and kind of calibrate based on what your business is.
Great advice. Thank you very much, Jim. Well, we're coming towards the end here, so I would like to thank my panelists here today, or our panelists here today, for really excellent insights, and for taking the time to share your experience with all of us. For those of you joining us today, thank you for taking the time to listen in. And really, you should think about Canada as a market, if you haven't already, as an expansion market. It's not as difficult to get into as our guests here today said, as long as you get the right people to help with that, and maybe avoid some of the pitfalls that Frank shared with us early on in his entry. I want to thank the Long Island Association, particularly Matt Cohen and his staff at the LIA, for organizing all of this for us and enabling us to bring to life the opportunities of expanding our businesses internationally. And I'd also like to thank Maple Business Council for helping giving us those insights into trade with Canada. They provided those slides earlier on and helped to organize the event today as well. Thank you again, and please be on the lookout for our next meeting, which will cover another key market that you may want to consider entering. Thank you, everybody. Have a great afternoon.
Yeah.
Thank you.
Thank you.